Everyone, welcome back to another edition of What's Happening Now with CNI Solutions. As always, remember to like, share, and comment on this broadcast, as there could be some information here that could be valuable, not just to yourself, but to a family member or a friend or a relative who can really use this information that we have for you tonight. Miss Brittany, tomorrow we got the graduation class coming up for CNI Solutions. Launch it for the entrepreneurs. I'm excited about that. Anything you want to say on that?
Just congratulations to our first class of 2023. They will do great, and we cannot wait to celebrate you guys and your business tomorrow.
Outstanding. Also, CNI Solutions, we have the Somebody Loves You event happening tomorrow as well at the Bob Harrison Senior Citizen Center. If you're around in the area and you're a member of the Bob Harrison Center, please come on by. We plan on having a grand old Opry of a time there. We got the singing groups. We got some guest speakers. We got some spoken word that's going to be happening. It is going to be a lovely, lovely event. And, of course, the Bob Harrison Senior Citizen Center is going to be feeding these lovely seniors. And we'll be there to help dish out some of those meals and just sit down and speak with some of the senior citizens, So tonight we have a special guest in our studio, and I'm going to get to the story of how he arrived here later on, because it's so important how y'all realize how our guest got to us. But we have Mr. Deonte Pulliam here, who is the owner and CEO of Supreme Coverage Insurance. Deonte, how you doing, sir?
I am doing well. Hello, everybody. My name is Deonte. I am the owner of Supreme Coverage Insurance, and I am very, very happy to be here to talk about insurance and anything that you need to realize that what you need to do is prepare for the future.
Outstanding. So tell us, we all know insurance is important, and I'm a big proponent of that, and I'm always getting with my family members and trying to get them to do it. Talk to us a little bit about the importance of it so our viewers out there can really understand that.
Okay. Basically, the importance of insurance is making sure that any preparations or anything that you have for when you pass, because that's one of those things that is guaranteed, that you make sure that there's a plan in place. And a lot of times we don't want to have the conversation about death, but it's the only thing that's really guaranteed for everybody. There's some people that died early, there's some people that passed later on in life, but as long as you have a plan in place and as long as you're prepared for that, the importance of that can do a whole bunch of different things.
Outstanding. So is this something that you've always done? This was working with insurance and investment something that you've done in the past, or did you just come into this?
So I've been doing insurance and investments for a little while now. It wasn't always the thing that I've always done. I always tell the story, and my mama don't even know this, but I'll tell you the story.
Here we go. We get some good juicy stuff.
Right. So my grandmother passed away a while ago, and I realized that my uncle from Chicago had a policy on her. I had no idea what insurance was. I didn't understand the concept and the purpose of what it meant to do.
Right.
So when he flew down from Chicago to make sure everything was taken care of, from that point on, I kind of asked myself, what is this for? What does this do? So I started researching. I started trying to understand what insurance is. And when I felt like I had enough information, because if you continue to get information and don't do anything with it, you're just getting information. I decided to pull the trigger and move forward and start actually doing things to help more people, so that there's people that wouldn't have the same worry and the same thing or the same issue that we had when we were concerned that my grandmother didn't have insurance.
Right. Well, that is very powerful, because I know for me and my family, for years, we've always seen that's always been a problem. Finding out after someone passed, grandma didn't have insurance, or Uncle Joe didn't have insurance. So then it turns into either, hey, we need to all come together and pitch in and to see if we could come up with the funding to bury our relatives, or in most cases nowadays, what I see a lot on the internet and social media is there's always these GoFundMes because someone didn't have those policies set in place. So what is there a particular policy? First, let's just say, let's just say I am your average worker. And let's just use Walmart. I work at Walmart, and I do 40 hours a week at Walmart, but I'm guessing I'm making $15 an hour. is there a spot or a place for me to be able to get insurance for me that I can afford?
Yeah, absolutely. Well, the first thing, let's start with the GoFundMe.
Okay.
GoFundMe makes billions of dollars, right?
Mm-hmm.
And the reason why they make billions of dollars is because a lot of people did not prepare.
Right.
And they make 3% off of whatever they've made from the beginning of GoFundMe until now. So you got to think about it. If people are really getting this money to bury somebody, GoFundMe is still making a profit off of them.
Mm-hmm.
Wow.
Which is, to me, honestly, it's ridiculous because we're just not preparing for the future. Why would you give another organization, and don't cancel me? Why would you give another organization money when, in all reality, if you do it the right way, if you make sure that you prepare the right way, you don't have to beg a church.
Right.
You don't have to go online and saying, "I need money to bury my mother." This is your mother, and you're leaving that responsibility to somebody else.
Right.
And in reality, to me personally, that's selfish. Because if we have money to buy shoes, we have money to buy clothes, we have money to do all these other things, then why don't we have money to spend to prepare for the future?
Mm-hmm.
So that's the first thing. The second thing is a Walmart worker. So most people at Walmart, right? They'll get benefits and stuff like that from their company. They'll get insurance, which is, a couple of dollars. But the reality is the all the benefits and all the insurance belongs to Walmart.
Absolutely.
It does not belong to you. So if they change carriers or if they decide to just stop covering you, then they can make that choice without your consent. That makes sense?
Yeah.
Mm-hmm.
So what I tell people is, if you're working 40 hours a week, there's different policies with different prices that you can actually get. A lot of problem is we're so afraid that it's so expensive, when in reality, the younger you are, the more reasonable it is.
Right.
So
Right.
I always say, get it while you're young. And it just depends on what you're looking for in a policy. If you're looking for something to last 30 years, get you a term policy. If you're looking for something that's permanent and it'll last to your 100 or 120, get a permanent policy. Get a policy that creates cash value. Get a policy that you can invest in. Get a policy that you can pull out and invest in businesses. It just depends on what works for you.
Mm-hmm.
If you want to work for the rest of your life, that's fine. I have no problem with that. Get you a policy that's going to last forever and something that you control and not the company you work for control.
Right. Right. So, when we talked about organizations and family members not being insured, could I per se take out a policy on a family member and insure them because they just don't want to do right and they don't want to put no money in? Could I do that?
Yeah, have a conversation with the person that you're trying to insure. Let them know what you're trying to do. And a broker like myself will come to the house, have a conversation with you guys, make sure everybody's on the same accord and on the same page of what we're trying to do. And you pay the premium to make sure that she's covered. I mean, maybe she doesn't understand the concept, or maybe he doesn't understand the importance of it,
Right.
but you do. Because at the end of the day, if they're older, they're going to pass sooner than you in most cases.
Right.
So you're going to make sure they're covered. So that way, if something happens, you can make sure that you have time to mourn instead of have time to beg.
Right.
Absolutely.
Viewers, I can't express that enough for those of you who are out there. If you have someone like this and someone is like that, please, share this video with them like this and have them reach out and contact, if not Mr. Deonte Pulliam himself, contact somebody, because this is important all the way around the board. I mean, I cannot express that enough. So along with just regular insurance, what if, say if I'm somebody who just happen to have a pot of money and I just don't know what to do with, what should I do with this money I got?
So in those situations, what I would advise you to do is find something that's going to make you more money.
Right.
An annuity, asset protection insurance, anything that's going to make you more money in the long run is what I would do with that money. Because if it's just sitting there not making any money, it's not making you any money.
Right.
So it's the same amount. If it's $10,000 and it's just sitting there in a savings account, it's just $10,000. A lot of people are not familiar with the rule of 72, and that just means in 72 years, the 10,000 you have will double in 72 years. Right. You know how long that takes?
Right.
I did
72 years.
I did a test at a bank. I won't say his name, but I did a test at a bank, and I put $5 in the savings account.
Mm-hmm.
I left it there. It's been there for 7 years. You know how much money I made up?
Probably $1.50.
5 cents. It's $5.
Wow.
It's $5.05 in that savings account.
7 years.
In 7 years.
Wow.
Yeah. So in your situation, if you leave it in the bank is not built to make you money.
Right.
The bank is built to make them money.
Correct.
So they're going to take your money that's sitting there and make more money for the bank. They want you to keep it there. That's how they make their money. They what they're going to do is they're going to take your money and they're going to invest it. That's how banks are built. They're going to invest everybody's money in the bank, and they're going to make money. And if you look at the law, I think the law now, if you have 100 or 200, 300,000 in the bank, they're only obligated to give you 20,000. I may be wrong about that. I don't think I'm wrong about that, but they're only obligated to give you 20,000 of the money that you have in the bank because everything is tied up. So
that is something.
Yeah. So you take your money and you put it in something that's going to make you money and not the bank money. Annuity, asset protection, anything like that that's going to give you a percentage of profit, you put it in there and make your money work for you.
Wow. So, viewers, I'm going to tell you the story. I mentioned it in the beginning of how we got Mr. Deonte here, and my co-host, as generous and delightful as she is, she happened to actually crash into Mr. Deonte.
It was not a crash.
It was a crash to me. There was a car accident. Things got broken, like this. So that's a crash to me. You want to tell that story, Miss Brittany?
Okay, viewers, since Mr. Charles wants to believe it was a crash, it was a slight side bump. So we were just riding down the road, and I didn't see him in my blind spot, and I happened to veer to the left and sideswiped him. So instead of Mr. Deonte calling the police on me, I actually saw his advertising on the side of his car, and I thought, you know what? Our viewers need to know about life insurance. So why not? If it's going to save me a ticket, and it did, and now Mr. Deonte's here.
Well, I don't know about side swipe and slight bump, but when I saw skid marks all across the road, it looked like people were doing donuts. So I don't know. She came back to the office limping like, Pops, I was in an accident, but I'm okay. So I'm not too sure how that all went. I'm not too sure how that accident went, but I'm glad everybody did turn out all right. And I am glad that we were to get Mr. Deonte here to talk about this, because it just goes to show you how fast something can happen. It just goes to show you how fast something can happen. Even though that was just a slight side bump, as she calls it, but to know that there was protection on both these families was important. So as you're doing this, and as you've been doing this, what are some of the known, I should say, fairy tales or stories that people believe in or hear about when it comes to insurance and investing and stuff like that makes them not want to do it?
So the biggest thing when you hear life insurance, people get a sour taste in their mouth, because when somebody says, "Hey, let's talk about life insurance," the first thing they think about is death.
Absolutely.
Right. But the reality is that's the one thing that we're guaranteed. We're not guaranteed wealth. We're not guaranteed clothes. We're not guaranteed food. We're not guaranteed shelter, but we're guaranteed death. So we shouldn't be afraid of having that conversation. And honestly, it's more people that look like me and you. It's very difficult to get us in the mindset of understanding that these things are going to happen. And we got to get out of the mindset of being selfish because nobody did it for us.
Right.
And we have to end the cycle somewhere. We have to start understanding that this is the opportunity to create generational wealth. It may not have been for me, but maybe I can do it for the people that I care about and give them a head start on life. Absolutely. And I think that's the most selfless thing to do. And in reality, a lot of times when you do have people that do have coverage, they're underinsured. I mean, right now, burials between 10 to 12,000, and most people have 3,000 in coverage.
Right.
So they're still going to have to ask somebody for 7,000 or 8,000, which nowadays with inflation and everything going up, it's going to be difficult to get. So then the state takes over, and then there's no telling where you're going to be, because I mean, it's the state. They're going to do the minimum that they have to do to make sure that your body's gone. Me personally, I don't want somebody in charge of that who really doesn't care about somebody that I was supposed to love and hold dear.
Right. I think you kind of hit the nail on the head there, because you mentioned that, this is something that we, as a people, we don't talk about. It's something that's not talked about growing up. It's something that's not talked about in friendship, your friends like this. It seems to only come up at the time of the event that it actually happens. And then it's one of those things, what are we going to do like this? And I think we have to start making that change as a community and start talking more with our children and loved ones and bring those things to the table. What is it? What are your wishes? What do you plan? What do you want done like this? And so people understand that and not look at it when we say, hey, Deonte, I want to go ahead and get some coverage put on you. I know you're not working right now, but I'm going to go ahead and get, $50,000 policy put on you. And you not feel like Charles is fixing to put something in your water and take you out like this. And that seems to be what the biggest issue is. We're afraid that our own family members are trying to take us out just so we can get that money from these life insurance policies. But the reality of it is what we're trying to do is secure our future for not just us, but our kids or your particular kids so that they may be okay and they may be well taken care of. And that's what we have to start preaching and talking to the young ones and our family members and having those. I wouldn't even say it's a difficult conversation. I think we just need to start having those type of conversations.
My biggest thing is I was blessed because my mom was sick as we were growing up. So at a young age, she had already set all three of us down and said, hey, look, I got this amount of life insurance policy with this company. I got this with this company. This is going to always be in this spot. So you know where you're going. You know where to get my papers from. You know what to do. We already had to sit down and cry for days trying to write a will for her because we never know with her and her sickness at that time when she would go, when she wasn't. So it kind of made it easier for us to be able to be okay with knowing that our mom is going to be taken care of. And then to have a parent like this man in my life, because every so often when we weren't all in the same area, we would get a random text message. Hey, make sure your credit's good. Make sure you got those life insurance policies. Don't make me fight y'all over my grandkids. So it was that type of motivation that made us go, you know what? Let's go look into this, not just seeing what our jobs offered us personally, but what we can do for ourselves outside of that.
Yeah, it's extremely important to have those conversations when you're young. Because if you don't have those conversations when you're young, you're going to get older. And old habits die hard. So it's hard for me to tell somebody who doesn't understand the purpose of insurance, doesn't understand how it creates generational wealth, doesn't understand how you can use a life insurance policy as living benefits instead of just death to somebody that's in their 50s or 60s or 70s until they say, look, I'm dying. I have these issues. I diabetic, took my leg from amputation. I can only see out of one eye. What can you do for me? Of course, at this point, it's going to be really, really expensive because, you're a risk. And what carriers look at is how risky is this person? And you're less likely to be a risk if you're 12, if you're 13, if you're 20, if you're 22. You're more likely to get a better premium. You're more likely to get more of the face amount. You're more likely to use more of the living benefits, and the carrier's okay with giving you whatever the heck you want because you're less likely to be sick. So I tell everybody, you're as young as you are now. You're as young as you ever be. All right. You're in the best health that you'll ever be right now. So why are you waiting to do it until you get sick?
Exactly.
It just doesn't make any sense. There's no logic. And you have companies. Only 0.5% of companies pay out.
Wow.
0.5. And the reason why is because nobody ever stays for a company forever. You leave, you get fired, you quit, whatever the situation is, only 0.5% pays out. So it's not really doing anything because it's just taking the money that you put into the insurance policy. You quit, get fired, whatever the situation is, they're going to keep that money. They're going to give it back to you because it belongs to the company. So it just doesn't make any sense to give money to somebody who doesn't have your best interest in mind.
You mentioned that there was different policies that you can get on what works for you. What is a good policy for someone to get and they're trying to make that money work for them?
So I always tell people to get a permanent policy. Permanent policy or a hybrid term policy, which in this case is an IUL, Index Universal Life Insurance Policy. And what that means is the face amount is through the roof if you want it to be. You have the option to invest in that policy. You can pull money out of that policy. It does affect the policy on a hybrid policy. However, you get so many benefits through this policy that you can use it to make your money work for you. So I always say getting something permanent is important. Now, term is always cheaper. It'll always be cheaper. Term means temporary. That means 30 years or more. You have to re-sign up, and when you re-sign up, you're sicker.
Right.
You have more issue that you didn't know about. Diabetes is common in our community. High blood pressure is common in our community. Those things show up on what they call an MIB report, which is the Medical Insurance Bureau. And that just means that any prescription they've given you, any surgeries that you have, or any diagnosis that you have, it shows up on that report. Carriers see that when you put your social in the system, and it's going to tell me whether or not I can give you $60 a month or $160 a month. So it's always important to make sure that you get those things while you're young.
Wow. Hey, viewers, again, if you know someone that is in need of insurance and needs to have this protection, please share this with them, because there's some good information here. Just share it and send it out, because it might be something they might need to pick up on. So as the owner of Supreme Coverage Insurance, okay, have you had one of those cases where you had somebody who you gave them insurance and they said a year later, 2 years later, you know what, Deonte, I'm going to cancel that because my car payment and this is costing me too much, and they cancel it, and then turn around, there happens to be a death, and someone's coming to you and say, hey, they had a policy with you. Well, they had one.
Yep, I've had one of those situations. My partner from Wisconsin, he's had one of those situations. That situation happens a lot because they see insurance as a bill. It is not a bill. Folks, listen to me. It is not a bill. If you look at it as a bill, then you'll always pay it as a bill. It is not a bill. It is preparation for the future. And if you see it as a bill, it'll be the first thing you let go. And it should never be the first thing that you let go. It should be one of those things that you figure out a way to pay, because nobody's guaranteed day after day after day.
Right. And you are so right about that, because we hear it so many times. You see it so much on the news or on social media where somebody young just happened to get into an accident, a stray bullet. All of those things always end up happening, and we always say, but they were so young, and yet no one had any type of coverage on them.
Right.
No one had any.
Like I said, if you look at the numbers, there's a lot of kids that are passing away from different issues.
Right.
Some are violent, some are unviolent. It is what it is. But the reality is, we always tend to think, oh, I'm going to live forever. My child's going to do this, or my child's going to do that. When in reality, nobody can determine that. We're not God, so we can't determine who's going to live and who's going to die, and how long they're going to live and how long they're going to die. So we play this game of Russian roulette, thinking that everything's going to be okay, when in reality is you just don't know. And just like you guys said, it always happens when they say, I can't pay this.
Right.
It's just like when you pay your car off. When you pay your car off, what happens?
That happens.
Right.
Stuff happens.
You need to take it to a mechanic. Something's wrong with the valve. The Cadillac converter is messed up. The check engine light is on. It wasn't on last week when I had to make a payment, but as soon as I paid the last payment, they go to check engine light. It always happens.
Right.
Because we're the same thing as anything that's working in this room right here. Wear and tear. It's always going to happen. So if we pretend that we're going to live forever, if we pretend like we can push it off, then that's when bad stuff starts happening.
Right.
That's when you go to the doctor because your chest is hurting and you realize that you got congestive heart failure. Now you're in trouble, because there's a lot of carriers there's a lot of carriers that's going to say, you know what, I can't do it. You're too risky.
Right.
There's a lot of people that get stents put in. There's a lot of things that happens over time that we don't realize. There's a lot of things going on inside of us right now that we don't even know.
Right.
And the reality is, if we treat it like it's already happened, or if we treat it like it's already going on, then we will be more likely to prepare for the future.
Right.
It just makes sense. I wish we all had notes on our heads. Just walk around and say, my body says, oh, I got diabetes. Oh, I got high blood pressure. I got gout. If our body just all of a sudden at 20 years old said, I got diabetes, you'd be like, oh, snap.
Right.
I gotta do something. My head is telling me I got diabetes. I need to get something. So, but like I said, the body doesn't tell you what's going on until later on in life.
Right.
So we need to treat it like it's happening right now, because it's not a matter of if, it's a matter of when.
Matter of when. Looks like one of our viewers, we got a question out there. It says, growing up, my grandma and grandpa had burial insurance. Never hear about the nowadays. Does such a thing still exist?
Yes. Burial insurance does exist. There's different ways. You can go get a plot. You can pay the funeral home. Those things work too. I always suggest just getting final expense. Final expense is exactly what it is. It's burial insurance. And what it does is take care of any expense that they may have when they pass away.
Okay.
So if you go do final expense, and it always ensures that it lasts to about 100 or 120 years old.
Okay.
On average, with technology and everything, we're going to live to about 91. So if I have a policy that's going to last to 100 years old, then I'm already insured. I'm already covered. There's no worry. And if you live to 100 or live to 120, that policy, that carrier says, oh my God, you lived this long, I'm going to give you all the money back. So you're going to get the money back anyway to make sure that you're covered either way it goes.
Okay, so now that's a good question. When you talked about burial insurance, is there a cap on how much the burial insurance will cover or final expense will cover? So, for instance, Brittany's Funeral Home Services, they may charge, like you said, $12,000 for a funeral, but maybe if I go to Deonte's Funeral Home, Deonte's charging $22,000. Will my final expense cover you, or will it only cover Brittany?
So it depends on what kind of condition Brittany's in. If you're worse off than most people, some carriers may say, hey, I can only give you about $12,000.
Okay.
Some carriers may say, okay, you're not that bad. So I'll be able to give you $30,000. The cap is usually between 40 and 50, depending on the carrier, and also depending on your condition. Because of course we're talking about who's risky and who's not. So if you're more risky, a carrier is going to say, hey, I'll give you final expense. However, it's not going to be 40, it's going to be 20, or it's going to be 12, because you waited too long to do this, and you're more risky to me when I give you this policy.
Right.
And it's going to be way more expensive than it should have been if you did it earlier in life.
Okay. So is it better? I don't know if I want to say better. If a person like Brittany waited too long, is it more advantageous for them to go with final expense or just get life insurance policy?
So I always tell people I'm 40. So 40 and up, it's always more likely to get a final expense. At 40, you still don't have a lot of issues, a lot of problems in most cases. So I always lean toward final expense. That way you have the top coverage, which is between 40 and 50,000. They don't see you as much of a risk. And then the prices are still reasonable. You're still looking at, premium ranging from 50 to $70, maybe a little bit more depending on what you're looking for.
Right.
But it's all based on height, weight, and condition. All those things come into effect because they have you in the category of I'll cover you for this amount because of blah, blah, blah.
Okay. So now you bring up something interesting to me. The coverage is based off of height, weight, and condition. I've heard and I've seen before where people's conditions have changed. Like they've had diabetes and now they don't have it.
Right.
They did weigh 350 pounds. Now they only weigh 225 pounds.
Right.
Well, if they already had coverage at the higher risk, will that coverage change for them?
So the biggest thing you have to do is look at your MIB report. Your MIB report, you reach out to them. There's a phone number you can call and say, hey, I don't have diabetes anymore. I'm not taking this prescription anymore. I need you to take it off my MIB report. All right, I don't weigh this much anymore, or whatever the situation is. I need you to take it off this report. You reach out to the carrier. It goes back through underwriting.
Okay.
When it goes back through underwriting, they can verify and say, okay, they don't weigh this much. They don't take this prescription anymore. They don't have this issue. Now you're not as risky. So now if it was 150, maybe I can bring it down to 80 because you're not so much of a risk anymore. And I can verify it that you're not that risk anymore.
Right.
So as long as underwriting has a verification to prove that you're not that risky, they'll bring it down. But you have to make sure that you go through the proper steps to make sure they can verify it, because they can't take your word for it. They have to be able to verify.
Right. We got another question from the viewer. It says, are you familiar with the certain things other communities have where families as a group place insurance on the older members and the last living family member gets the payout?
Yes. So what happens in that situation? So a lot of people will come together.
Okay.
Say, hey, grandma can't afford insurance. So we're going to get insurance. We're going to see how much it is. It's going to be 20, 30,000. We're all going to put our money in, and we're all going to make sure that this policy is paid for. And what happens is they'll make different beneficiaries. So the first beneficiary, the second beneficiary, and so on and so forth.
Right.
And what that is there's a primary and a contingency. Contingency is just the same thing as a contingency plan.
Right.
It's a just in case.
Mm-hmm.
So if for some reason the primary beneficiary passes away, goes to the second contingency. After that one passes away, it goes to the next one, and then it goes to the next one, and then it goes to the next one. So the last person that's alive will make sure that they have that, but it's a just in case.
Right. So okay. All right. Cool. Looks like we got another question. Is there a way to get hood insurance if you're in a bad health already? I'm going to ask you, what is hood insurance?
I don't know what hood insurance is. I thought that was a typo.
Oh, that's
good. Okay, it's good insurance.
Good insurance. Oh, I apologize for that, viewer.
Look,
because
hood.
Our producer put up hood, but we misread that. It was a typo. Look, good insurance. Okay, got it.
Can I see the question again?
Can we see the question again, producer? Put it back up again. Is there a way to get good insurance if you're in bad health already?
Yes.
Okay.
So I'll give you an example. I met a guy yesterday, stage 3 kidney disease.
Okay.
He thinks that he's not going to last 16 months. I was able to find him a carrier because, again, he is risky, but carriers will still take him. So bad health, yes. It really just depends on what the issue is. All carriers are not going to take you, just being honest. Some carriers are going to say, no, absolutely not. They're taking this medication. You're taking metformin. We don't cover you if you're taking metformin or whatever the situation is. But there's a lot of carriers that are guaranteed issued. Guaranteed issue says, I don't matter what's wrong with you. We're going to guarantee this. You're going to pay this amount. You're going to have this face amount. Now, you might have to wait 2 years for it to be in full effect because they just want to make sure that you live that long. And if you don't live that long, what the thing that they have is called a return of premium. So if you pass away before the 2-year trial period or the 2-year period is up, they'll return all the premiums that you paid. Now, it may not be enough to bury you, but it's something to start with.
Okay. All right. Another question we got up here, it says, I have a family. Does term make sense for me?
Yeah, and I mean, it really just depends on what you're looking for. Like I said, term is inexpensive, and term can, as far as the face amount, can be as high as they will allow. And I always say for younger people that are in good health, it's okay to get term if the only thing you're really looking for is just to have a death benefit for when you pass away. There are some people that just want to make sure that the insurance does the work for them or does different things. And term policy is okay. There's nothing wrong with term. And I advise term for people that are in good shape. Get term. It's a low premium for a really high face amount. It's okay. The only problem is it just doesn't last forever. That's always my concern.
Right.
The max is usually a 30-year term.
30 years. Okay.
Right. And after 30 years, you have to re-sign it up. And if you re-sign it up, like I said, you're older, you're sicker, there's things going on. So it's going to make it expensive.
So let me ask you this: if normal term is just about 30 years, and let's say I'm 30, and I do a term policy right now, and let's say I got it for 150,000, right, for term. So come 60, I'm gonna have to redo it again. Could I redo my 30 years at 40 and not, or 39 and not 60?
No,
you can't do it that way
because it's going to have to go back through underwriting.
Okay.
So when it goes back to underwriting, they're going to pull up the MIB report. They're going to say, okay, 30 years ago, you didn't have diabetes. Now you do. 30 years ago, you didn't have congestive heart failure. Now you do. 30 years ago, you didn't have high blood pressure, diabetes, whatever. Now you do. So now I have to set a premium based on your condition. You can still get term in most cases, depending on what company you use, but it's not going to be 40.
Right. Okay, got it. Hey, viewers, man, there's been some excellent questions coming in from the viewers out there. Again, please share this information with some family and friends. Mr. Deonte is actually giving some good stuff here, stuff I'm learning that I thought I knew that I didn't know,
Right.
but there's been some things I'm learning myself here. So let me ask you this, and we talked about how we as a community don't talk about death benefits and death insurance with our family members. How do we get that started? How do we convince, our community to sit down with their loved ones, their family members, and actually talk about that? How do we convince our community, as one of the viewers had mentioned in there, where the family gets together and they put a policy on the eldest person because they know he's probably going to go before any of us, or she's going to go before any of us. How do we convince them like this is the best way to do this, especially if you're not only looking for coverage for burial, but you're also looking to start and create that generational wealth for your family?
So we have to get in the mindset, right? We got to get in the mindset of what can this do for me?
Right.
I personally believe in that. This just may be my opinion. We don't have enough conversations if it's not acting, if it's not athletes, if it's not music. We don't have enough different conversations to make sure that people understand how important it is. And I feel like if we're talking about the new artist on the 100 list, or we're talking about the new athlete who won the slam dunk contest, we can sit back and have a conversation about insurance, about why it's important, about what it can do for you, because a lot of us really don't know what it can do for you. We don't have the knowledge, we don't have the understanding on what it can do for you to create generational wealth. So I think that's important. We just need to sit down. We need to, just pull somebody to the side and say, hey, this is a family meeting. We need to talk about this because this is important, and explain it to everybody who has no idea how important it is. And I think that's the only way it's going to change. We're going to have to make people listen, make them understand, rather than give them a choice, because we've been doing that for a while, and GoFundMe is still making money.
Right. I think, you bring up such valuable points there. And I think what we need to do is probably as CNI Solutions, we need to get into our communities and perhaps have you come and be that guest speaker and talk to our community and talk to the people.
Absolutely.
And say, look, this is why we need to do this. This is why you need to do this, for your family members, for your friends. So you're not that person on GoFundMe, saying Ray's passed, we got to GoFundMe for him gone, like this. No, Ray had, $80,000, $100,000 life insurance policy. We good, like this. And I really think we need to do that because, like you said, it's a lack of education.
Really,
it's a lack of education. It's a lack of financial literacy, of understanding what all you can do with that. It's more than just the burial. It's, there's investments you can do with that. There's a lot of things you can start that generational wealth. And if we have to get out of our own way, viewers, we have to get out of our own way. We got to stop thinking that somebody is out to get us because they say, I'm going to put a life insurance policy on you. That's not what we're doing. We're trying to not only have that financial stability for when someone does pass, but also that we're able to use that money and maybe reinvest it into our next family member, who might need that life insurance policy, so we can start creating that generational wealth. We got a few questions I'm going to get to, but I got a story I'm going to tell y'all behind this. So our next viewer has a question that says, our community looks at life insurance as being money hungry. Yes, Lord. Whereas other communities look at it as estate planning and making sure their loved ones are good if something should happen. True or false?
That is true. Unfortunately, that is true. The reality is people that look like me and you are selfish.
Yes.
I hate to say it, but I'm honest. People that look like me and you are very, very selfish. We're only thinking about ourselves. And I don't know where it started, but I know it's been going on for a long time. Well, they didn't do it for me, so I'm not going to do it for them. And we got to get out of that mind. Like I said, it has to start somewhere. Right. And if somebody doesn't make a decision and say, I don't care what happened, I don't care who didn't do it for me, I'm going to do this now, and I'm going to change the cycle. And the reality is, it only takes one person in the family.
Yes.
One person changed the cycle in the family. Like, well, Deonte did it, so why can't I do it for my family?
Right.
You know, he didn't care about having the money when he was alive. He took care of his kids. He made sure his kids were on their way to be financially literate or financially stable. They don't have to worry about anything.
Right.
They're taken care of. That money was given specifically for them, so they don't have to worry. And it just, like I said, it takes one person in the family to say, I'm going to do this for my kids. I think you should too.
Right.
And it will be disappointing if you didn't do it for your kids, because if you love your kids the way you say you do, you will make sure that they are taken care of and stop being freaking selfish.
Right. We got another question from our viewer. It says, what if I'm on a fixed budget?
So again, a fixed budget, it's okay. So my job is to figure out what's reasonable.
Right.
And we'll sit down and we'll have a conversation of what makes sense. Because again, I don't want it to be a bill. I don't want it to be something that you have to decide whether you're car note or whether you're insurance. I don't want it to be a situation where you have to decide your life insurance or food. I don't want that.
Right.
You know what I mean? So my job is to make it as reasonable as possible. And if it's $40 for 5,000, I would rather give you 5,000 rather than nothing at all.
Right.
At least I gave you something to start with.
Right.
And things change. Maybe you had an increase in pay. Maybe you had an increase in your fixed budget. I don't know, but it does happen sometimes. So if I say, hey, let's do $40 for 5,000, it's a start. And if something changes in the future, call me. I'll come back. We'll take a look at it. We'll make phone calls. We'll figure out what we need to do to get you more. But I would rather give you something to start the race with rather than nothing.
Right. You know, I mentioned that, to you earlier when we talked about, having you come and talk about this, because a lot of times with family members, unlike mine, because they know I would beat the living crap out of them, but they tend not to listen to the parents or the family members, because it's kind of like, you're just trying to hold me down, or you just want to get my money like this. But when a stranger says it, it's the gospel.
It makes sense.
It makes sense to them then.
Yep.
When you could have been sitting there preaching and saying it the whole time for the last 10, 15 years, but let a stranger come say it. Oh, did you know that I can get a life insurance policy even though I'm sick now? And I can still have burial insurance? Now it all comes out the woodwork then, like this. You're like this, but but that is true though. It happens so much, even with us in our entrepreneur class, and we're teaching entrepreneurship, because they're so close to us. They're like family. So when I'm telling them things, it's kind of like, Charles is just saying that, or Charles, is he's trying to make it scare us. But then when I bring someone in and they say the same exact thing, you're like, oh man, did you know that, Charles? Yes, I knew that. I just told you that 2 days ago.
Absolutely.
So I think with you coming in, that would be awesome to be able to speak to them. And it's more than just seeing our solutions. It's somebody who's actually doing this, who's somebody who has credibility. It's somebody who visualizes and sees people every day who go through this, who are on fixed income, who have family members who think they're out to get them, all of that. And when you're able to talk to them and they can say, you know what, he's making a whole lot of sense. I see it now, even though Uncle Joe said this to us 2 weeks ago, but I like the way Deonte explained. He explained it a little bit different the way Uncle Joe explained it. So we got another question out here. It says, can I leave a gift to my grandkids through my life insurance?
Yes. So your beneficiary can be whoever you want it to be.
Okay.
It doesn't have to be your husband. It doesn't have to be your daughter. If you want to leave the policy for your grandkids, then make them the beneficiary. Like I said, the primary and the contingent. You can make them the beneficiary. You're the client, and your job is to make sure to give the money to the person that you trust is going to do the right thing. So if you say, hey, I want to leave 50% to my daughter, and I want to leave 50% to my granddaughter, you can do that. It's your policy. You can set it up the way you want to set it up. So yeah, you can leave a gift for your grandkids or whoever you want to.
Hey, I tell you what, viewers, if any of you out there are wanting to leave a gift to CNI Solution as your beneficiary, trust me, I will take care of it for you. I will make sure you have one of the most outstanding burials that this side of the Mississippi has ever seen. All right? Your money will be well taken care of. If you can't trust us, who can you trust? All right? Anyway, so Mr. Deonte, I tell you what, this has been awesome. This has been awesome. It's been awesome, and it's been enlightening. You've been giving us a lot. Any closing remarks that you have?
So the biggest thing is insurance is important. It is very, very important. And we have to get in that mindset of understanding that it is important to get it when you're young and not to get it when you're old.
Right.
You can use it to create different things. You can use it to create generational wealth. You can use the living benefits for disability issues or anything like that. So we have to understand that insurance is not about death. It is about life.
Right.
So use the living benefits at your discretion, structure the policy the way you want it, and make sure that you create something not only to help you out if you can, but also create wealth for your family. So that way one day you can end the cycle and change the minds of the masses.
That is the key thing right there. It's ending that cycle. Viewers, let's end this cycle together. Please, let's end this cycle together. I will be putting out some information on when we're going to have this class, this session, and we'll have Mr. Deonte here at C&I Solutions to talk about this to you live in person, so that if there was questions that you might not have had a chance to ask on this live, because you're going to see this again, but we will have that class, and it's going to be beneficial to our community and to all those who are watching right now. So, as always, remember, we do have our event happening tomorrow at the Bob Harrison Center. So if you're going to be around, please come on out and help support the senior citizens for that. Your yesterday is not your today, and your today is not your tomorrow. Good night.